Sentiments at the Nigeria's equities market are negative as investors trade stocks in GTCO and UBA. Fisayomi Folashade, a financial analyst at Financial Derivatives, joins me for an update on market activities. Fisayo, thank you so much. Pleasure to have you on the show today.
Thank you for having me.
We're seeing a bit of a negative sentiment at the market. OSHA index down marginally today. Talk to us about how investors are trading the market, especially, of course, with the whole, I believe we're 5 days or 4 days to the elections now. How are investors processing everything?
Well, the market performance this week has been mixed. I mean, the market gained yesterday 0.08%, and then we are seeing a decline today, 0.05%. So I think investors are just trying to be cautious. But then compared to the loss of last week, Friday, which was caused by the decline in Airtel Africa, Airtel Africa declined by 6%, and Airtel Africa is the most capitalized stock on the exchange. So this sort of affected the general market performance. But this week, as at yesterday, we saw investors buying into that particular stock. I mean, because of the potentials embedded in that particular stock, talk of the internet penetration, talk about the payment service bank operation. So then there's some sort of opportunities in that space.
I suppose we could say the same for MTN too. I suppose the telcos in general listed on the exchange.
Yeah, but talk about Airtel Africa is double listed. I mean, listed on the London Stock Exchange as well. So I think that's why we're seeing that buying interest in Airtel particularly. And overall, in February, I think the market performance has actually been very impressive compared to last year, compared to this
and
December.
Given all that, all that's happening around the market right now, but also something else that investors have been dealing with the full-year earnings. Talk to us about, what the numbers, how are you interpreting the numbers? What do the numbers say about the operating environment for the companies last year, and perhaps what we can expect this year?
Well, based on the numbers that have been released, I will say that Nigerian companies are really thriving at this time. Looking at everything that happened to the business environment last year, talk about the high energy prices, talk about the inflationary pressures.
Forex scarcity.
Exactly.
It's quite a long list.
Exactly. So all of these things, impacted the earnings, but then they were still very resilient. I mean, let's look at the telecom sector we were talking about. MTN Nigeria recorded a revenue of about 2 trillion naira, which was quite impressive. That's the first Nigerian company that will be recording that amount of revenue in a year. So, and which was actually due to the double-digit growth in its data, fintech, and digital services, and also which trickled down to the bottom line performance as well. Then something more surprising is the agri sector. The likes of Okumo
and just Presco and Okumo.
Yeah, Presco, and they recorded a revenue growth of about 57% and 47% respectively. So I think that industry is really benefiting from the the backward integration strategy, and as well as the increased focus on local production. Talk about the tier 2 banks as well. We saw a resilient performance from them. They recorded an average of about 30% increase in revenue, and I think this was inked on the back of increase in interest rates environment last year. The banks really benefited from that. There was loan growth in their portfolio, as well as the increase in their digital services. So, but then we expect that the tier 1 banks will begin to release their results before the end of the quarter, and we also expect the same trend in that sector. But then, that's just last year. So a lot has happened.
Obviously, but does that mean that we should expect some cherry picking in those sectors? I mean, telcos, the surprise from the agriculture guys, Presco and Okomo, and the tier 2s. I think Fidelity really did shine last year.
Yeah, it did shine, but then we started seeing investors taking profits from that particular stock. But then a lot has happened this year, and the focus is what is going to be the performance at the end of Q1. Yeah. So for the banking industry, in particular, strict regulations, increased CRL debits, a lot of their assets was destroyed in the process of this riot and all sort. Also, we'll start seeing decline in their deposit portfolio based on the the business activities as well, it is going to affect their asset quality because people cannot actually transact the way they used to. There's decline in aggregate demand. And so we start seeing that filtering into the performance of the banking system, and not just the banking system, the economy as a whole. Talk about the manufacturing sector, decline in aggregate demand, talk about insurance sector, there will be increase in claims due to this protest and all sorts. So this decline in performance is also going to filter into their stock price performance as well as the market itself.
Interesting. Excuse me. Now, for the consumer themselves, especially looking at the consumer goods sector, what can consumers expect this year? We know that inflation is expected to increase, but it's quite interesting to see how these companies have remained resilient in a very difficult operating environment. But obviously, I know that they're trying to adjust to the consumer's wallet, etc. But I'm just wondering how that plays out this year, going into the year. There's still uncertainty around we're having a new government coming in. We're still going to wait for the policies of the new government to unfold and see how they lift the economy, etc. So how much of that uncertainty is playing into investors, the investing psyche, as it were?
Well, I think for the manufacturing sector, the consumers and the manufacturers are going to bear the bear the brunt of this issue. For the manufacturers, I think there's going to be decline in aggregate demand, like I mentioned, which is also going to filter into their bottom line. So the top players in the sector are expected to increase their prices, lead in a price increase, but then it will not be able to match the costs. So there will be some sort of break-even point for them, and also this is what investors will be looking out for, because all investors are looking out for return on their investment. They're looking out for profit, and so it's going to be a thing for investors.
Well, we're looking forward to seeing how that unfolds. Thank you so much, Fisayo, as always, for talking to us today. Fisayomi Folashade, financial analyst at Financial Derivatives.